gas transportation companies. It has utilized its own transportation for transporting of the gas materials to the customers or gas materials to the customers. Then in that situation, section 194C is not going to be applicable. It is outright sale, contract for sale. So section 194C is not going to be applicable. If it has utilized third party transportation services for transporting of gas, then in the situation it is contract for carrying out the work and it will come under the definition of work, and section 194C is going to be applicable, and TDS has to be deducted on the amount that has been paid to the subcontractors for transporting of the gas to the customers. Next, another point here is in case of Sri Chowdhury Transport and Co. A contract that has been entered with the cement company for transporting of raw material cement from the company to the customer, and as the assessee does not have any transport facilities, it has entered into a contract with transporters for carrying out cement from the manufacturer site to the customer site. Here, the assessee is not going to be act as intermediary or the middle person between the cement company and the transporter company, because there is no privity of contract that exists between the cement company and transporter company. So it is the transporter company, the contract that has been entered, the assessee he himself has entered into a contract with the transporter company. So the transporter company is a subcontractor. So whatever the amount that have been paid, it is so the TDS liability, the responsibility of deducting the TDS lies on the assessee he himself. So whatever the payment that has been made by the assessee to the transporter company will be subject to TDS, and TDS has to be deducted, and the net amount has to be paid to the transporter company under section 194C. Section 194C has responsibility on the assessee he himself, not on the manufacturer. Next point here is section 190, and we have discussed, I think we have discussed all the important points here. Television companies, In respect of cold storages, there is one important point in respect of cold storages. The assessee has entered into a contract with the owner of the cold storage for storing of the goods in his godown. Here, the assessee is going to pay the cooling charges to the godown owner. Here, this will not come under the these cooling charges will not come as rent, because there is no right that is established while entering into a contract with the owner of the godown, because owner of the godown has his own discretion to place the goods that have been stored in the godown at any place he wants. There is no specific place that has been specifically allocated to the assessee for storing of goods. So this will come under section 194I is not going to be applicable, section 194C is going to be applicable, and the rate of TDS that will be deducted in case of individual and HUF it is 1%, in case of others it is 2%. Section 194C. Section 194D. Section 194D is in respect of insurance commission. So assessee is payer is insurance company, any person either resident or non-resident. Payee is also any resident. Payee is a resident, and time for which the TDS has to be deducted is either credit or payment or credit or payment, whichever is earlier, and rate of TDS that will be applicable is 5%. And what is the threshold limit that will be applicable? Here is 15,000 rupees. Up to 15,000 rupees, no TDS is going to be deducted. If the amount is 15,000 rupees, then TDS has to be deducted at the rate of 5%. So one important thing here is amount of what is the insurance commission? Insurance commission has been defined. Insurance commission includes any remuneration or any amount that has been paid by the insurance company to the assessees in the form of soliciting or procuring of claims, or revival of policies, or extension of revival of policies, and continuation of policies, of renewal or revival of policies for the insurance business will come under whatever the amount of payments that have been made will come under the definition of insurance commission. Next, section 194DA. Section 194DA talks about amount that has been received on maturity of the amount that have been received on maturity of insurance policies. See, section 10 subsection 10d has specifically excludes or specifically exempts whatever the amount that have been received on the maturity of the insurance policies, life insurance policies. Maturity proceeds are going to be exempted. But here on fulfillment of conditions only this exemption is available. If conditions are not fulfilled, then it is going to be taxable. What are the conditions? There are premium conditions that have been prescribed here. Depends upon the time of taking the insurance policy. If insurance policy has been taken before 1/4/2020, 1/4/2003, then the premium that has been paid by the policy holder to the insurance company should be up to 20% of sum assured. Sum assured here includes the bonus that have been allocated to the assessee, to the policy. Sum assured, 20% of sum assured. If it exceeds 20% of sum assured, then the maturity proceeds are not going to be exempt. It is going to be taxable, and section 194DA comes into play. If the policy has been taken after 1/4/2003 but before 1/4/2012, 31/3/2012, then the policy premium has to be up to 15% of sum assured. If it exceeds 15%, then it is going to be taxable. If the policy has been taken between 1/4/2012 to 31/3/2013, then the policy premium amount should be 10% of sum assured. If it exceeds 10%, then it is going to be taxable. If the policy has been taken after 1/4/2013, but here the thing is, the policy has been taken by the policy holder under section 80U. For the purpose of section 80U or section 80DDB, or if he covers under section 80U or section 80DDB for the purpose of deduction, then in that situation, the maturity proceeds are exempt, and there is no premium condition that will be applicable to the policy holder, and whatever the maturity proceeds that have been received by the policy holder will be exempt under 10 section 10D. If the policy has been taken for any other purpose, and if the policy premium amount is up to 10% of sum assured, then it will be exempt, otherwise it will be taxable. So these are the conditions that need to be satisfied. If the policy amount that have been received by the survivor of policy holder, or legal heirs or legal representatives of the policy holder on the death of the policy holder, then there is no premium condition that is going to be applicable. Entire amount is going to be exempt in the hands of policy holder, family members or persons, legal heirs or legal representatives under 10 section 10D. If these conditions are not satisfied, then section 194DA is going to be applicable. So section 194DA, here payer is any person, either resident or non-resident. Payee is resident individual, and time is at the time of payment, and rate of TDS is here is 5%. Rate of TDS here is 5%, and threshold limit is less than 1 lakh rupees. Less than 1 lakh rupees. If the amount exceeds or more than or equal to 1 lakh rupees, then TDS is going to be deductible. So here, if the conditions are not satisfied, it is going to be taxable. Anyway, it is going to be taxable. But in order to TDS implications, in order to trigger the TDS implications, threshold limit that have been prescribed here is more than or equal to 1 lakh rupees. More than or equal to 1 lakh rupees, then only the TDS has to be deducted at the rate of 5% from the maturity proceeds. Now, section 194 DA has been completed. Section 194 E. What is section 194 E? Section 194 E is payments have been made to non-resident sports person, including athlete, sports person, sports association or institution, entertainer, and entertainer. All these persons. Okay. Who is the payer? Payer is all the associates except the individual or HFO whose turnover gross receipts or whose turnover or gross receipts during the preceding financial year does not exceed 1 crore rupees in case of business and 50 lakh rupees in case of profession. Second point here is payee. Payee is non-resident, sports person, including athlete, sport association or institution, entertainer. This is payee. And deduction of periods. What is the timing for deduction of periods? Deduction of periods timing is credit of payment whichever is earlier. And what is the rate of TDS? Rate of TDS here applicable is 20% plus surcharge plus health and education at the rate of 4%. And there is no threshold limit that has been prescribed. See, non-residents for non-residents, there is no basic exemption limit, there is no threshold limit. Even a 1 rupee they have earned, they need to pay the tax at the rate of 20%. So here, the one beautiful point here is what are the activities under which the non-resident sports person, sports association, entertainer will be involved, for which the TDS implications are going to be triggered. Those are, if the non-resident sports person has participated in any games, whatever the amount of payment that have been received by him will be covered under the TDS obligations. Second one is, any sports association or sports institution has conducted any games in India, then whatever the payment that have been received by the sports association or sports institution, TDS implications are going to be triggered. Next, any non-resident sports association and any non-resident sports person who has contributed to the magazines, newspapers, articles to the magazines or newspapers, whatever the amount that has been received by the non-resident sports person is going to be taxable. Next, any non-resident sports person who has participated in any cultural activities or in any programs or entertainment activities or entertainment programs, then obviously it is going to be taxed under 194E. If non-resident sports person has participated in any advertisements, then also section 194E is going to be triggered. Section 194E. What is section 194E? Section 194E is payment is made from the account of National Savings Scheme to any person. So payer is any person, payee is any person, either resident or non-resident. Deduction is at the time of credit or payment whichever is earlier, and rate of TDS that is applicable is 10%, and threshold limit is prescribed is 2,500 rupees. Up to 2,500 rupees, no TDS is going to be deducted. If it exceeds 2,500 rupees, then TDS has to be deducted at the rate of 10%. Obviously, this is one simple non-applicability of this section. This section is not applicable in case of payment that has been made to the legal heirs or legal representatives of the deceased associates in case of death of the individual. No TDS is going to be deducted, entire amount is going to be, no TDS is going to be deducted. Whether it is exempt or not exempt is another obligation. No TDS obligations are not going to be triggered. Section 194E. Section 194F. Section 194F is repurchase of units of mutual fund or unit trust of India. Obviously, payer is the person who is connecting the mutual fund or unit trust of India. Payee is either resident or non-resident. Time is reduction at the time of payment. Rate of TDS is 20%, and there is no threshold limit. That is applicable. Here, next section 194G. That is commission on sale of lottery tickets. See, winnings from lottery tickets are going to be triggered under section 194B. Commission that is going to be charged for the sale of lottery tickets is going to be triggered under 194G. Payer is all the associates, any person either resident or non-resident, and payee is any person either resident or non-resident, and payment time is at the time of payment, credit or payment whichever is earlier. Rate of TDS that is applicable is 5%, and threshold limit here is 15,000 rupees. Up to 15,000 rupees, no TDS is going to be deducted. If it exceeds 15,000 rupees, then TDS obligations are going to be triggered. So here, the definition of commission. What the commission include? Commission include all the type of payments, either in terms of commission in the form of commission or in the name of commission, in the name of any other name or anything that have been paid by the payer to the payee are going to be covered under section 194G, and TDS at the rate of 5% is going to be deducted if it exceeds the threshold limit. Section 194G completed. Section 194H. Section 194H is the residual section which I say commission or brokerage. Who is the payer? Payer is all associates means either res all assessees. All assessees means either resident or all assessees other than individual RHCF whose total turnover, gross receipts or sales does not exceed 1 crore rupees in case of business or 50 lakh rupees in case of profession. 50 lakh rupees in case of profession. Payee is resident. Deduction is credit or payment. Timing is credit or payment whichever is earlier. Rate of interest that is applicable here is commission or brokerage. Yes, right, commission or brokerage. Rate of interest that will be applicable is 5%. Yes, 5%. And threshold limit here that is threshold limit is up to 15,000 rupees. Up to 15,000 rupees, there is no TDS that is going to be applicable. If it exceeds 15,000 rupees, then TDS that has to be applicable is TDS obligations are going to be triggered under section 194H. Here, the beautiful thing here is section 194H includes some items, section 194H excludes some items. Section 194H includes all the contracts relating to three activities, that is commission that has been charged for providing of services or buying and selling of goods or making available any valuable articles, things or any items. It excludes what? It excludes buying and selling of securities. Here the person, any payment that has been made either directly or indirectly in the name of commission or brokerage or whatever name called to the payee for the above three purposes, then TDS obligations are going to be triggered under 194H. If the person TDS obligations are not going to be triggered under 194C or 194C or 194C, then 194H is going to be triggered. Next, here non-applicability of TDS obligations. TDS obligations are not going to be applicable in terms of sale of securities, sale or purchase of securities. TDS obligations under 194H are not going to be applicable because it is outright sale. Second point here is payments that have been made to by payments that have been made by the BSNL or MTNL to the calling offices franchises, public calling offices franchises, then no TDS obligations are going to arise. Next, transactions relating to buying and selling of securities, obviously any transactions relating to professional services, where the professional services definition has been defined under section 44AA, no TDS obligations are going to be triggered. Professional services 194J is going to be triggered. 194J threshold limit is 30,000 rupees and rate of TDS that is applicable is 2% in case of professional services and 10% in case of others. Next, any payment that have been made by the television channels or newspapers to the advertisement companies in the form of advertisement companies for advertisement, for booking or canvassing or procuring of advertisement or clients or advertisements, then there is a security circular that have been prescribed here. Here is the amount that has been retained by the advertisement companies and is not going to be taxed, is not going to be triggered under section 194H. 194H is not going to be triggered on that amount. Specifically, it has been excluded or it has been exempted by security circular. Where there might be situations where the contract has specifically mentioned in the contract itself that services or the name commission, the word commission has been used. If the word commission has been used specifically, then in that situation, TDS obligations are going to be triggered under 194H, and whatever the amount that has been retained by the advertisement companies has to be seen whether TDS has to be deductible or not. Next, in the in case there might be a situation where in case of Qatar Airways situation, Supreme Court judgment, assessing officer has came with an obligation that with a discussion that the difference between difference between the minimum selling price and maximum selling price of airway tickets is going to be considered as additional special commission in the hands of agents, and it is going to be taxed under section 194H. Court has looked into the situation and it has told that, see, the maximum price is the price at which it has given it has given option to the transport agent to sell the tickets, airway tickets at the maximum price. They can even sold the tickets at the price which is less than the maximum price, and there is uncertainty at what price the agents are going to be sell the tickets, and it is highly impossible or highly impracticable for the airline companies to track each and every agent, each and every ticket at what price they are going to be sold, at which price they are going to be sold, and it is not possible for the airline companies to get the feedback from the every agent regarding that what price the tickets have been sold. So there is a lot of uncertainty exists in this case, and the thing is, second point here which we have considered here is, if the airline tickets has been sold, see, the airline tickets has been sold. Second point is, the insurance, the airline company has to direct the insurance commission, has to direct the it from the commission that has been paid for the airline agents between the difference between the price, the minimum price and the normal price at which the tickets are sold. This is not maximum price; it is normal price. Normal price is obviously certain because airline companies are going to be decide the normal price at which the tickets are going to be sold. So from that only the tickets have to be deducted, but not the difference between the minimum price and the maximum price at which the tickets are going to be sold. This has been specifically mentioned in Qatar Airways judgment Supreme Court. Next, there are three things that happens here. Here is section 194H are not going to be applicable if the payments that have been made, by the principal to principal basis, means here three judgments that comes into play. First judgment is Ahmedabad Tickets Stamp Vendors Association. Here the beautiful thing is stamp vendors are going to get the stamps at a discounted price, and these discounted price stamps are going to be sold by the stamp vendors to the retail customers. This is on principal to principal basis, even though there is a sale transaction happening here, but the discount that has been issued with the stamp vendors is not considered as not on the commission, because the transaction is happening principal to principal basis. There is no agent that is involved here. The agent contract is not there, or agency services are not going to be available here, or not going to be interlinked here. So section 194H is not going to be triggered. Next, in case of the payment made by the RCC Bank for the National Financial Switch Services, which is a network of ATMs. Here also it is not termed as brokerage or commission, so section 194H is not going to be triggered. Next, third point here is, however, if the payment has been if the contract has specifically mentioned the term brokerage and payment has been made, then the payments are considered as brokerage or commission, and specifically section 194H is going to be triggered. 194H is going to be triggered. CBDT circular is not to be considered here, and it is specifically mentioned under section 194H. Next, section 194I. Section 194I is rent, including lease and sublease. Who is the payer? Who is the payee? Payer is all assessees except individual and HUF, where the total turnover, gross receipts or total sales does not exceed 10 lakh rupees, 1 crore rupees in case of individual, in case of business, and 50 lakh rupees in case of profession, or 50 lakh rupees in case of profession. Payee is resident. Deduction is credit or payment whichever is earlier. Rate of TDS is 2% in case of plant and machinery, equipment, and 10% in case of furniture, and 10% in case of land and building, furniture and fittings. So, threshold limit that have been prescribed here is 2,40,000 rupees. If it is up to 2,40,000 rupees, no TDS implications are going to be triggered. If it exceeds 2,40,000 rupees, TDS implications are going to be triggered. One beautiful question that has been framed by ICAI in study material, that whether the 2,40,000 rupees has to be considered for each activity separately, or it has to be considered for entire all the activities combined. So 2,40,000 limit, 2,40,000 rupees limit is aggregate limit, means it is aggregate of all the services that have been, all the payments that have been made by the payer to the payee. That is in terms of what to say, for machinery, for equipment, for land, for building, for land and building, for furniture, for fittings, for furniture and fittings. Entire amount has to be considered under for taking the limit of for considering the limit of 2,40,000 rupees. Now, another beautiful question that has been framed. Another beautiful thing is section 194 I is not going to be applicable in the following cases. First case is obviously in case of cold storages, where the assessee company has entered into an agreement with cold storage owners, where the cold storage owners are going to store the goods in the cold storages, for which the cooling charges have been paid. This cooling charges section 194 I is not going to be triggered here because there is no rental agreement that has been entered. It is not termed as cooling charges are not termed as rent. Section 194 C is going to be applicable. So what is the definition of rent? Rent includes any payment that have including lease or sublease or whatever name called that have been entered by the assessee with the assessee with the payer for payment of for payments in terms of for the purpose of usage of machinery, usage of equipment, usage of land, usage of building, usage of land and building, or usage of furniture and fittings is termed as rent. So, if it falls in the definition of rent, then only section 194 I is going to be triggered. If it does not fall under the definition of rent, then 194 I is not going to be triggered. So many litigations happens within the definition of rent itself. So, Japan Airlines Limited, there is one beautiful Supreme Court judgment where Supreme Court Supreme Court said that what happens here? Here, the payments that have been made by the airline company, that is passenger service fees or any other fees that have been made by the airline companies to the airport operators will be termed as rent, and section 194 I is going to be triggered. So Supreme Court held that whatever the charges, all the different types of charges that are different types of payments that are made by the airline companies to the airport operators, either passenger service fees or usage of technology, usage of safety of the passengers, or usage of any other services, will not termed as usage of land and building. So 194 I is not going to be triggered. Next, in terms of mobile towers, usage of mobile towers. If the assessee company has used the mobile towers and also the perimeters that is using where the mobile towers are going to be applicable, whether whether 2% rate or the rate of TDS is applicable or 10% rate of TDS is applicable. Supreme Court held that here the predominant intention is usage of mobile towers and equipment, that is technology and equipment, but not usage of premises. Usage of premises is incidental, insignificant or immaterial thing where it is considered, and the predominant thing is usage of mobile towers. So rate of TDS that is applicable is 2%, that is applicable for plant and machinery if the aggregate amount exceeds 2,40,000 rupees. Next, where in terms of co-owner situation, where there is a property which is owned by the co-owners, and the rent as per the house property section 27, whatever the rent that has been received by the co-owners individually has to be considered for the purpose of availing the exemption, whether it is standardization at the rate of 30% or it can be interest amount on letter of property deduction. It has to be considered separately under section 27. Whether the limit of 2,40,000 rupees has to be considered separately for two co-owners separately. Yes, 2,40,000 limit has to be is available for two co-owners separately here. Next situation here is no TDS is going to be triggered on the refundable deposits. So any refundable deposit that has been issued by the payer from the payee, no TDS obligations are going to trigger. If it is non-refundable deposit, then TDS obligations are going to be triggered, and TDS is going to be paid, or TDS obligations are going to be triggered in terms of warehousing charges, in terms of arrears of rent, in terms of advance rent. All these TDS obligations are going to be triggered. Next, another beautiful thing here is any lump sum amount of premium that have been paid by the person in terms of long-term lease contracts, whether it is termed as rent or one-time premium amount or a one-time non-adjustable premium amount or long-term premium amount, whether it is summed as rent. It has been clearly mentioned that it is summed as rent. It is summed as rent. It is not summed as rent. So previous obligations are not going to be triggered. Previous obligations are not going to be triggered here. Are not in the payments of rent. So previous obligations are not going to be triggered. Next, yeah. The charges that have been charged by the airport operator for the parking or landing of aircrafts or vehicles in the parking area, whether it is termed as usage of rent, usage of land and building, and TDS under 194 is going to be triggered. So here, the Supreme Court held that it cannot be termed as rent because usage of there is no predominant intention of usage of land or building. It is only insignificant, immaterial, or not a recurring activity, incidental activity for landing of aircraft, and mere landing of aircraft or mere usage of premises cannot be termed as usage of land and building, and section 194I is not going to be triggered for the purpose of TDS implication. TDS obligations are not going to be triggered. So, TDS obligations are not going to be triggered in this case. Next, tax would be required to be deducted. Tax is required to be deducted only on the rental amount excluding the GST component. On the GST component, no TDS is going to be triggered. On the amount that is after excluding the rental amount, after excluding the GST amount, TDS is going to be triggered. TDS is going to be what we say deducted. Next, section 194I is going to be cleared here. Section 194IA. What is section 194IA? Section 194IA is TDS on sale of immovable property. So, what is the definition of immovable property? The definition of immovable property clearly mentioned that it should be a capital asset. If it is not a capital asset, obviously section 194IA is not going to be triggered. What is not a capital asset? Not a capital asset is so many there are in capital we have already mentioned. And specifically in terms of immovable property, rural agricultural land. Rural agricultural land is not a capital asset, and transfer of rural agricultural land capital gains are not going to be triggered, and it is completely exempt. And rural it is rural agricultural land. In case of urban agricultural land, up to the threshold limit, TDS obligations are not going to be triggered. If it exceeds threshold limit, then TDS obligations are going to be triggered. So payer is who? Payer is any person. Payee is any person, either resident or non-resident, and deduction is credit or payment whichever is earlier, and credit or payment whichever is earlier. Rate of TDS is what? Rate of TDS is 1% of the sale consideration, and threshold limit is less than 50 lakh rupees. If it is more than or equal to 50 lakh rupees, then TDS obligations are going to be triggered. Okay. Here the thing is, here 50 lakh rupees, whether it is the sale consideration of stamp duty value or it is which fair market value, which value we have to consider for the purpose of deducting the TDS amount. For the purpose of deducting the TDS amount, we have to consider only the sale consideration. We should not consider the stamp duty value, or we should not consider the value that has been decided by the valuation officer. Section 50C, you have remembered, right? 50CA. So we have to consider only the sale consideration. Actual sale consideration we have to consider, against which the TDS is going to be deducted at the rate of 1%. If it exceeds, or if it is more than or equal to 8 lakh rupees. Next, sale consideration. One of the interesting point is here is sale consideration. What sale consideration includes? Sale consideration includes not only the amount of amount that has been paid by the payer to pay. It also includes maintenance charges. It also includes parking charges. It also includes development charges. It also includes club charges. It also includes membership charges. It also includes all the type of miscellaneous charges. Either it can be usage of lift, or it can be usage of any other facilities or amenities that are provided to the members, or membership fees that have been collected. All these are included in the sale consideration in order to decide the threshold limit. Okay. Next, no TDS is going to be triggered. TDS is not going to be triggered in terms of the immovable property if the immovable property is owned by two or more individuals, and here the property is owned by two or more individuals. and the individual share of the property is less than 50 lakh rupees, then TDS is not going to be triggered. The combined value can be greater than 50 lakh rupees, but the individual share means 50 lakh rupees has to be considered per property, per individual person and individual share also. For individual share also, it has to be considered. This should not be considered on combined value. Next, section 194 IA is completed. Section 194 IB. Section 194 IB is a residual section in terms of commission brokerage, rent, in terms of rent. Means rent, it is also repayment of rent for individuals and HCF. Means here who is the payee, who is the payer, who is the payee. Payer is individual and HCF other than individual and HCF where the total turnover, gross receipts or sales exceeds 10 lakh, 1 crore rupees in case of business and or 50 lakh rupees in case of profession are not going to be covered here, and remaining all individuals are going to be covered. And payee is any resident person. Deduction is credit or payment whichever is earlier, and rate of TDS is here. Rate of TDS here is what? Here is 5%, and threshold limit is 50,000 rupees per month or quarter of the month. Means if it is up to 50,000 rupees, no TDS is going to be triggered. If it is exceeds 50,000 rupees, then TDS obligations are going to be triggered. Yes. Here credit or payment is not credit of the rent for the March other than on the last month of the tenancy if the property is vacated, or payment credit of the rent for the last month that is March month, or last month of the tenancy if the property is vacated, or payment whichever is earlier. You have to remember this. This is separately for section 194 IB only. Next, if the payer fails to pay, if the payer fails to furnish the fund, then TDS has to be deducted at the rate of 20%. However, if in any case the deduction cannot exceed the last month rent. Deduction of TDS cannot exceed the last month rent. Means it has to be deducted up to the last month rent only. Next, you can refer question number 15 of ICS study material. In the question number 15, what they have mentioned, in question number 15, they have mentioned that they have clearly mentioned in question number 15. In question number 15, they have clearly mentioned what they have clearly mentioned in terms of rate of. You can refer question number 15. Next, section 194 IC. Section 194 IC is payment to specified contracts. Payments in terms of specified contracts. Here, payer is any person, either resident or non-resident. Payee is resident, and the rate of TDS that is applicable here is 10%, and consideration for joint development agreement and credit or payment is here earlier, and there is no threshold limit that has been prescribed, and TDS is going to be applicable, and cash consideration or monetary consideration that is paid in the joint development agreement. See, what is the joint development agreement? Joint development agreement is the contract that has been entered by the landowner with the land developer, where after the developer has entered into a contract with the landowner that he will pay the consideration for developing the property in terms of monetary consideration, non-monetary consideration. Monetary consideration, TDS is going to be applicable on monetary consideration only, but not on non-monetary consideration. On the monetary consideration, if the monetary consideration is insufficient or is not sufficient for discharge of TDS amount, then what happens? Then we can say that if the monetary consideration is not sufficient for discharge of TDS, then it is a debatable option, a debatable question, which has to be clarified. I will clarify it in later stage. I will get you clarified in the later stage. Next, section 194J. Section 194J is fees that have been paid for professional services, technical services, royalty, non-conflict fees, and calling services, and directors remuneration, director commission, director remuneration also. Here, payer is all the entities other than individual or HCF whose except individual HCF turnover of gross receipts or sales does not exceed 1 crore rupees in case of business, 50 lakh rupees in case of profession. Payee is resident, and Reduction in credit of payment, whichever is earlier, and rate of TDS is 2% in case of royalty, non-complex features, professional services, technical services, calling services, and 10% in case of commission to directors, commission to remuneration that has been paid to directors. Okay. Here, beautiful point here is, here we have to consider the remuneration to the directors into two categories, whether it falls under section 192 or it falls under section 194C. It falls under section 192 means there is a contract that has been entered by the company with the directors, and director is termed as employee of the company. Then TDS under 194, 192 is going to be triggered, and 194J is not going to be applicable. If he is not considered as employee, means this is a contract for service, contract of service, not contract for service. Then section 194J is going to be triggered. So it is termed as professional services. Section 194J is going to be triggered, and TDS at the rate of 2% has to be deducted. And what is the threshold limit? Threshold limit here is slight of 30,000 rupees, flat and 30,000 rupees that have been prescribed. If it is up to 30,000 rupees, then no TDS is going to be triggered. If it exceeds the limit of 30,000 rupees, then TDS is going to be triggered. And this 30,000 rupees, 30,000 limit is applicable only for royalty, professional fees, technical fees, non-compete fees, calling services. For others, for remuneration of director and for commission that is paid to the director, there is no threshold limit that has been prescribed. You have to remember carefully. Here one simple important point here. Next, no TDS under section 194J is applicable. 194J is not going to be applicable in the following situations. What are the situations that have been prescribed? Here, section 194J is not going to be applicable. Obviously, we have discussed if it is covered under section 192, section 194J is not going to be triggered. Next, if the payments are being made for personal purposes, if the payments are made for personal purposes, obviously section 194J is not going to be applicable. Section 194C is still not going to be applicable. Section 194H is also not going to be applicable if it is for personal purposes. Personal purposes, so many sections are not going to be applicable if it is for personal purposes. Next, in case of TPA, TPA, that is what is the meaning of TPA? TPA means technical person TPA. Okay, TPA. TPA, here TPA is a person who is going to be acting on behalf of life insurance and health insurance companies for settlement of obligations and paying to the hospitals. So here, whatever the amount that has been paid by the TPA to the hospitals are subject to section 194J, because these hospitals are covered under 194J. So doctors, whatever the payments that have been made to the doctors, section 194J is going to be triggered, and TPA has to deduct the TDS at the rate of 2% from the payment that have been made by the TPA while settling the obligations. So notification has been prescribed here. What the notification has says, the notification says that software that is acquired by the assessee and it has been subsequently transferred without any modifications, it is outside sense, section 194J is not going to be triggered. TDS for any previous transfer of software is already deducted, then 194J is not going to be triggered. These technical services. Next, these transportation charges paid to the transaction charges that are paid by the BSE, paid to the BSE by the shareholders or members of the members, is not under technical services, because technical services itself demands for three things: personal participation, human intervention is required, and it should be specialized services, and it should be of technical nature, and it should be use of the services of the human intervention. Then only we can say it as a technical services. Otherwise, it is not the technical services. Here, whatever the transaction charges that are paid to the BSE is not under technical services. So section 194J is not going to be triggered, and consideration for use or right to use of computer software will the same falls under section 194J. Consideration for use of software is going to be triggered, considered as technical services, section 194J is going to be triggered, and TDS at the rate of 2% has to be deducted. Next, notification has been prescribed here. What is the notification? Payment that has been made to the sports person, all the payments that have been made to the sports person, sports association, sports person, or referees, match referees, or umpires, commentators, or all the type of professionals. These are all termed as professionals. So whatever the payment that has been made to all these persons, section 194J is going to be triggered, not section 194. Section 194 is not going to be triggered. Section 194J is going to be triggered. Next, section 194K, that is income from the mutual fund units. Payer is mutual fund companies. Payee is resident individual. At the time of payment, deduction is at the time of payment. Rate of TDS is 10%, and threshold limit is what? Threshold limit is 5,000 rupees. Up to 5,000 rupees, no TDS is going to be triggered. If it exceeds 5,000 rupees, the TDS is going to be triggered at the rate of 10%. Section 194K. Section 194. After section 194K, section 194LA. Section 194LA is what? Section 194LA is payment of compensation on acquisition of the immovable property. Certain immovable property includes enhanced compensation or enhanced consideration also. Here, acquisition of immovable property. Here, immovable property includes rural immovable property, urban immovable property. Rural immovable property acquisition is a site of the exempt under 10 section 37. Rural agricultural land, acquisition of rural agricultural land, acquisition of urban agricultural land is a site of the exempt under 10 section 37. In all other cases, section 194 LA is going to be triggered. So, payer is any person resident or non-resident. Payee is any person resident person only, and deduction at the time of payment. Rate of TDS is 10%, and threshold limit is what? Threshold limit is 2,50,000 rupees. Up to 2,50,000 rupees, no TDS is going to be triggered. If it exceeds 2,50,000 rupees, then TDS is going to trigger at the rate of 10%. Not applicability. It is not applicable in case of payment that have been made, award or payment or that have been made in terms of agreement that has been entered under one act that has been prescribed. What is that act? That act is RTCTLARR Act. RTCTLARR Act. If the contract that has been entered under RTCTLARR Act, then TDS is not going to be triggered. Section 194 LA is not going to be triggered. Whatever the amount of payment that has been made, it exceeds 2,50,000 rupees, award exceeds 2,50,000 rupees, TDS is not going to be triggered under 194 LA. 194 LB. What is 194 LB? 194 LB is income by way of interest payment that has been made for infrastructure debt fund. 194 LB specifically into infrastructure debt fund. 194 LC is for the government securities and rupee denominated bonds, and government securities, rupee denominated bonds in foreign currency. And 194 LD is specifically for qualified institutions, qualified financial investors and qualified institutional investors, QFI, foreign institutional investors and qualified financial investors specifically. They are also rupee denominated bond and rupee denominated bonds and rupee denominated bonds in foreign currency. Next, section 194 LP. So payer is any infrastructure fund, obviously deferred under section 10 section 37, and payee is resident, non-resident, obviously non-resident other than company and foreign company or foreign company. Rate of TDS is 5%, concessional rate of 5%, other than 20%. See, for non-resident, for interest 20% plus surcharge plus health and education cess is applicable. So, company's TDS is going to be deducted at the rate of concessional rate of 5% plus surcharge plus cess for the non-resident. If the interest falls under the special category, interest is paid by the infrastructure debt fund, and there is no threshold limit that has been prescribed here. And section 194 LC. Section 194 LC is interest payment on foreign currency loan or bonds or debentures paid by the Indian company or business trust. Obviously, payer is Indian company or business trust. Payee is non-resident, not being an individual, not being a company or foreign company. Deduction is at the time of payment. Rate of TDS is 5%, construction rate of 5% plus surcharge plus health and educational cess, against one contrast to 20% plus surcharge plus health and educational cess. And here threshold limit is not prescribed. There is no threshold limit, and here the interest is divided into following categories. First thing is, in terms of loan agreements that have been entered between 1/7/2012 to 30/6/2023 to 2023, and in terms of rupee denominated bonds on or before 30/6/2023, these are not covered. These are all not covered under previous obligations. And long-term infrastructure bond between 1/7/2012 to 39/2014, 1/7/2012 to 39/2014, and long-term debt bond including long-term infrastructure bond 1/10/2014 to 30/6/2023. All these four cases, obviously, TDS is not going to be triggered under 194 ELD. 194 ELD is interest payment that has been made by the Indian companies or infrastructure businesses to under rupee denominated bonds or foreign bonds or rupee denominated bonds. So any person including government of India and payee is non-resident, not being an individual, not being a company or foreign company, rate of TDS is 5%, considered 5% the surcharge as health and education cess, qualified institutional investor, qualified financial investor or a foreign institutional investor, and creditor payment whichever is earlier. And here the rupee denominated bonds or rupee denominated bonds have to be listed on recognized stock exchange, which is located in IFSC center, and those bonds that have been entered between 1/7/2012 to 30/6/2023, those rupee denominated bonds interest only considered under 194 ELD. Section 194M. What is Section 194M? Section 194M is, you can say, residual section, those where the payments that have in terms of royalty, brokerage, commission that have been made, where TDS is not going to be deducted under 194 194H, 194J, then 194M is available, where TDS has been deducted. So payer is who? Payer is all the individuals other than individual ICF whose gross turnover or gross sales or sales or gross receipts does not exceed 1 crore rupees in case of business or 50 lakh rupees in case of profession. And payee is who? Payee is resident person, and question is credit or payment whichever is earlier. Rate of TDS is obviously 5% here, and the threshold limit here is threshold limit prescribed is what? Here threshold limit prescribed is 50 lakh rupees. 50 lakh rupees means if it is up to 50 lakh rupees, no TDS is going to be triggered. If it exceeds 50 lakh rupees, TDS is going to be triggered. And one useful thing here you have to remember is Section 194M is not applicable for personal payments. Means if the payments have been made for personal purposes, 194M is not going to be triggered. 194M is not going to be triggered here. Next beautiful thing. Okay, that's it, I think. So we have covered all the sections. So let's make a review or recap of previous sections also from starting onwards. Introduction to TDS and TDS. Section 190. So we have started with Section 190, right? Section 190. What it says? Section 190. Any income that has been earned by the assessee, the previous is going to be taxed in the assessment here, but the government has made the following type of payments where the TDS has to where the tax has to be paid in the previous year itself. Those are tax deducted at source, tax collected at source. Next, advance payment. Fourth one is tax that is paid by the employer on non-monetary purposes under 192 1 capital A. Okay, these four types of payments. See, these are the four types of payments. So Section 192 1 capital A, that is tax on non-monetary purposes that is paid by the employer on behalf of employees. Here two things happen. First thing is whether it is disallowed under Section 40 capital A subclause 5. these payments are disallowed for the employer. For the employee, whatever the tax that has been paid on non-monetary purposes is taxable in the hands of employee, and it is specifically exempt under 10 section 10 CC. And whatever the tax that has been paid by the employer on non-monetary purposes can be claimed as rebate or while discharging the tax by the employee and while discharging the tax by the employees. Obviously, these are the options that are available for the employee. Next, if the employer has not paid the tax or not deducted the tax or not deducted the tax but not paid the tax to the government, then he is termed as assessee in case of default. So what is the definition of assessee in case of default? If the assessee in case of default appears, then section 201 will trigger. Section 201 subsection 1 tells about assessee in case of default. Assessee in case of default means if the assessee has not deducted the tax itself, one obligation, has not paid the tax, has deducted the tax but not paid the tax, has not deducted the tax, there is time limit that is applicable here for this, and for has not paid the tax, has deducted the tax but not paid the tax, for these two there is no time limit. So here this 201 is not going to be applicable in case of 4 cases. First thing is in terms of search and seizure, where in section 132 in case of search and seizure, where books of accounts of the assessee are going to, where the books of accounts has been seized by the income tax authorities, and assessee is not under is unable to deduct the TDS because of non-availability of books of accounts and documents, then these provisions are not going to be applicable. Second thing is where in terms of second thing is where the TDS is not required to be deducted as per the order of the High Court. As per the order of High Court, where retrospective amendment has been made of the law, or the judgment of Supreme Court, or judgment of larger body of High Court, then in that situation also TDS assessee cannot be termed as assessee in case of default for non-reduction of TDS. Next, third one is where the assessee is not required in terms of TDS is not deducted in terms of non-resident category. Non-resident category, the assessee has not deducted the TDS on payments made to the non-resident. Non-resident is a person who has the residency outside India, in the country or territory outside India, where India has DTW agreement, and it relates to section 44H, and if it relates to section 44H, assessee cannot be termed as assessee in case of default if any appeal or any revision that has been applied for section 44 has subclause 4 has been withdrawn, then also TDS implications assessee cannot be termed as assessee in case of default, or an application has been made to the authorities within 2 years from the date on which the assessment notice has been sent to the assessee for demand notice has been sent to the assessee for the TDS for the TDS amount, then also it is not going to be triggered, and section assessee cannot be termed as assessee in case of default. These are three situations where assessee cannot be termed as assessee in case of default. Then here the thing is section 201 assessee cannot be termed as assessee in case of default. There are time limits that have been prescribed here. What are the time limits? So if the assessee has not deducted the TDS, then it can be recovered from the assessee. So recovery proceedings can be initiated only up to the specified time limit. What are the time limits? In case of, there are two types of time limits. First time limit is where up to 7 years from the date on which from the end of the assessment year in which the TDS has to be deducted but not deducted, up to 7 years, where any application has been made, then 2 years from the date of from 2 years from the end of the assessment year in which application has been made or appeal has been made, is the time limit that is going to be triggered for TDS that has not been deducted. For TDS that has not been paid or TDS has been deducted but not been paid, there is no prescribed time limit. For any period, TDS can be demanded or TDS can be recovered from the assessee. Next, what are the interest obligation that will arise? Interest is going to be obviously going to be arise. So here, if the asset is termed as asset in case of default, then interest will be required to be paid on the amount of TDS not being deducted or the amount of TDS is deducted but not paid. Then, if it is related to the government assets, the government employees is related to other assets. If it is related to government employees, then it has to be what is the time limit within which what is the interest that will either it is government employees or it is other than government or other persons. Then the interest at the rate of 1% per month or part of the month in respect of periods that have not been deducted from the following month from which the TDS has not been deducted till the time up to which the TDS has been paid to the government. 1.5% per month or part of the month from the date on which the TDS has been deducted up to the date on which the TDS actually paid to the government. TDS actually paid to the government is the rate of interest that will be applicable. And here another beautiful thing that you have to remember here is when the TDS has to be paid. What is the time limit for which the TDS has to be paid? It is related to government employees, it is related to other than government employees. If it is related to government employees, then in the situation, there are two things arises. So first thing is, TDS can be paid on the immediately on the day itself without any tax alone, or it can be paid on the following month, up to 7th of the following month by the government employee, by the government authority, for government officers. If it is related to other persons, for the month of March, for the other months, for the month of March, TDS has to be paid by 30th April. For the other month, TDS has to be paid by 7th of the March. 7th of the March. 7th of the March, not 7th of the following month. TDS has to be paid along with income tax allowance. Okay. Next, what are the time limits for furnishing of returns? There is an option that is available by the assessing officer. If the assessing officer has provided an option under section 192, 192, 194A, 194D, 194H. So 192 is salary, 194A is what? 194A is interest other than interest on securities, 194D is insurance commission, 194H is commission or brokerage. In all these four cases, TDS can be discharged on quarterly basis. So quarterly basis, what are the time limits for quarterly basis? Quarterly basis time limits or for 30th June quarter, 7th of July, for September quarter, 7th of October, for December quarter, 7th of January, for March quarter, 30th April. And furnishing of TDS returns. So TDS returns furnishing, what are the due dates for furnishing of TDS returns? TDS returns due dates are for June quarter, 31st of July, for December quarter, 31st of October, for September quarter, 31st of October, for March quarter, the December quarter, 31st of January, and for March quarter, obviously 31st of May. These are the time limits for furnishing of TDS returns. And what are the TDS forms that are applicable? Quite interesting, right? TDS forms that are applicable. Here, there are three in terms of section 192. Section 192 and section 194, 194P. For these two sections, 24Q has been prescribed, form 24Q has been prescribed, where TDS return has to be filed. And for all the other section 193 to section 196D, 26Q has been prescribed, and section for non-resident companies, foreign companies, section 197Q has been prescribed. And there are three specific sections. Those three specific sections are 190, 194IA, 194IB, and 194IA, 194IB, and 194M. 194IA is relating to immoved property, payments that have been made for transfer of immoved property. 194IB is relating to payments that have been made to the individuals and HUF, rental payments that have been made to the individuals and HUF. And 194M is what? 194M is in terms of brokerage. In terms of payments that have been made, where the payments that are not covered under 194C, 194J, 194H, then 194M is going to be triggered. For all these three payments, there are three specific forms that have been prescribed. For 194IA, form 26QD that have been prescribed. For 194IC, form 26QD that have been prescribed, and 194M, form 26QD have been prescribed. And for these forms that have been, income tax forms that have been prescribed separately is for 194IA, form 16B D has been prescribed on 94 IC, Form 16 C has been prescribed on 94 ID, Form 16 D has been prescribed, and here 194 ID, Form 16 D has been prescribed. Next, these forms have to be filed within 15 days. Within 15 days from the end of the month in which, from the date of the month in which, end of the month in which the TDS has been filed. Form 16 days has been made available to the respective authorities. Next, Form 16B, 16C, 16D. Next, in terms of these three sections, 194, which sections? Section 194, 192, section 194 IA, section 194 ID, section 194 M. TDS has to be paid within 30 days from the end of the month in which the TDS has been deducted. Okay, 30 days is specific time limit that is applicable for these category of sections. Next, section 200, section 192. Section 192, what it tells about section 192 is TDS on salaries. Okay, TDS on salaries. So salary, when we discuss about salary is going to be covered. Salary is going to be covered under section 15 to section 17. Okay, section 15 to section 17 is about the term salary. So section 15 is joining section. Salary consists of basic salary, BLS allowance, allowances, purposes. All these are covered under salary, and there is a standard deduction limit that is available for salaries, and there is the professional tax paid is also available for salaries. So standard deduction limit is obviously 50,000 rupees, 50,000 rupees flat amount, and professional tax paid is whatever the amount that has been paid by the employer is professional tax paid. So here, who is the payer? Payer is any person either resident or non-resident, and payee is any person either resident or non-resident, and deduction is at the time of payment, and rate of TDS is obviously average rate of tax, that is average rate of tax, and threshold limit is basic exemption limit that is applicable. And here the thing is how the rate is calculated. Here, whatever the amount of TDS tax liability that is considered, that is arriving during the previous year, we have to divide the tax liability, the entire tax liability by the total income, and we have to get the average rate of tax. This average rate of tax has to be deducted, has to be divided by 12 months. Then we will get the average. We will get total rate of tax, and we have to deduct it by 12 months. We will get average rate of tax. And the average rate of tax has to be multiplied with the salary amount that is paid for every month. Then we will get the TDS amount that has to be deducted every month. Okay. Here, there are some of the special points that are going to be applicable here. First thing is section 194 to 192, 1 capital A, obviously tax on non-monetary purposes we have already discussed relating to this, and furnishing of TDS statements, and non-monetary purposes statements, and profit and loss salary statements is applicable on the assessee, on the employer, only if the salary exceeds 1,50,000 rupees. Otherwise, it is not going to be applicable. Form 16A is sufficient. Otherwise, Form 1626, Form 16A is sufficient. Otherwise, statement has to be furnished. Next, if the employee has furnished all the other income and losses and all things, employer will consider only the house property loss, and other losses are ignored, and all the other income will be considered while arriving at the TDS obligation or TDS liability. Here another thing is, here we have to consider is if the employee is in the dual employment, he is multiple employer, he is a multiple employer where he is providing services and multiple employer, then he has to give the the salary related payments to the other employer, where other employer has to consider the payments that have been received by the employee from the employer. Next, if the other thing that we have to consider here is the just take a break of